So now we are going to talk about entries in the market. Zine, we're going to talk about entries in the market. And the picture we may use on our mind, these are not my pictures, but this is from the people that were training me. So if they go back on YouTube and see the video, these are not mine. I'm just using someone else's pictures, just in case that we're running on anything I try to say that I copy the thing as it, which we actually copied, but you know, yeah. Now the first thing as we identify in everything else is the range. This is the top of the range, which is the resistance. Then we saw the support, resistance, support, which we have our resistance and our support that we are work with, right? On this image, it is showing us a specific candle, right? This not closed yet, so we're not going to talk about that. What we are going to talk about is the fact say there is a candle that broke above the resistance, which closed above it, which should indicate the price want to continue to move up. Now we need to see something before. We need to see something before we take a trade. We need to see a bottom wick, because we need to wipe out seller all the time. If you're going to enter buys, the sellers, you have to wipe out the sellers first before you continue to buy. You see me? Just like this, just a while ago. The candle when start and push up green. But if it's going to continue moving down, the price needs to get some buyers in and then just wipe them out, which happened on this candle too. This candle went up green and then the sellers wipe out the buyers and take their money. Push down, same thing at me also. Buyers come in, stop right so. Sellers wipe them out. If you want to continue to push down, that's how they do it. If the candle close without a wick, bro, it can be tricky. But based on the recency of how the price will move these days, we're not going to talk about that. Because it move down or up without the wicks, right? But like we say, in terms of moving up, if price are going to move up, you want to push down first, take out some sellers before continuing to move up, right? If price wants to move down, it will allow the buyers to take control first and then wipe them out and just continue pushing down. That's one thing when I notice in the market, because that's how the market operate. Yeah? Now, this I tell you when we enter, when we set stop loss, and this is one I think that where I show you before. Now you have two ways of set a stop loss. You can set a stop loss on the current candle bottom wick or top wick, or you can set it on the previous candle bottom wick or top wick. Essentially, the stop loss is us identifying that the price, if the price break below this low of the candle or break above the high of this candle, that means say we get the trade wrong and it all push further up and we now waste our money. I try say we get it right, because sometimes we get trades wrong too. So we never move a stop loss either. But just this just a show the places where we use to put the stop loss. And then this would indicate to we how we need to enter the market in terms of lot size. So if one time our entry is supposed to be so Zane, and we know say alright, then we are trying to put it at the bottom of one of them wiki, but our account is not we account $100, and this would be $100 if we use one full contract. We say alright, just to make sure say we have more balance left, just in case the trade wrong. What we go do, we go cut the contract in half. So we use 0.5, which means that this move down will be $50. If you're wrong, we have $50 left, can enter next trade. You see me? So we just cut the contract size, put the stop loss down so, and take profit wherever. Put take profit to the high of as zone. So you see the take profit here supposed to match over here, so basically. So we use zones for stop loss, or candles, previous candles, or whatever for stop loss, or previous lows for stop loss, or previous highs for stop loss, and previous lows and previous highs for the take profit too, depending on which direction you trade. So if we are trade up, you're going to use previous lows for stop loss and previous highs for take profit. And the inverse, if we are taking a trade if we go down, you're going to use the previous high for the stop loss and previous lows for TP. Hopefully you get that. Right? Alright. So there are multiple ways people trade. You have like if you enter a trade, some people use breakout, which is this. Breakout is when the price pushes above a resistance and push and close above resistance, push and close below the support, right? That's one way, that's called a breakout, right? Breakout strategy. You also have the reversal strategy, where the price turn back. So when the price reach up so, then you see next candle come down, and then we would get the special candle what we talk about all the time. Let's see if we can find this one over here. So this candle, you will see this at the bottom of the range. Once there's a support there, there's going to be something like this down yaso, or on the flip side up yaso. So them are the candle then what we always talk about on this. The way how this candle look now, this is how you would find a candle set at the top of a range. So you see the resistance yaso. You see one of them when we take off the drawing so we can see properly. The way how the candle constructed, the top is bigger than the bottom and a small candle body. Those are areas where we look to take a trade like that. Where else? Right here, so. You know, that I want to hear them too. And this was yesterday on the 5 minute. Last night we take the trade too. When we see the candle here, we take the trade on this. Because we see the candle there. There's a candle here one. So those are the candles in like at the support area or the resistance area of the chart. The support at the resistance, and we go back to the 15, go back to which probably there, and unhide my thing. See it now. So what I like to see a candle like this up here so, or on the flip side down here so if we go back up. That is the candle we use to trade. Like from the ranges. So if it's not breaking out, it's supposed to get a reversal each time. Them candle left always show reversals, right? Breakout usually do continuations, and the other candle I'm sure the hammer candle is what them call it, always show reversals. Now the breakout, not even only breakouts, but most trades, whenever you see a streak or one color candle, like you have a streak or green candle, never rush to enter the market there. And this is a perfect example right here. So 1, 2, 3, 4, 5, 6 green candle. I would never try to enter the market right here because too much green candle make you so, and in need to give us a candle, in need to get some sellers in. So if this need to continue pushing up, it will start turn back somewhere around. So if it not go down here, if it's not going to go to the support level, then somewhere around this area where it is now, it will start turn around because it needs some sellers to come into the market so them can wipe them out to push higher up even further. So that is how the market moves. Once you see so much green candle, never ever rush to take a trade to continue moving up. You have to wait until you get a couple reds. When you get the red there, you're going to get a green to create a next one of them thing here, so which is called a support to push further up, right? And me stand right, as you see. We not take trade as well. That's a trap. That's a trap. So if this wants to move up further, this will get in the next 2 minutes, you will get a green candle printed, and then we'll continue moving back up if it should. Now, if this move down, it will push below this area and close down here. So that would have been the breakout. So we can't take a trade from here. So a series of green candle, a series of red candle as well. We would never try to take a trade with a series of red candle because you need to go up first before you push further down, right? The same thing with the green. We can't take a green with a series of green because you need to push down before we continue moving up a same market move. So upon this, it series of green, you know, get something like this nowhere. You have to get something, you have to get it somewhere. You have to get a support somewhere for if price continue to move. You have to take out some sellers. Some of the man them who are getting direction wrong, who just are buying the market, the man them who are the big man have to take out for them money. The man them who run the market have to see the impatient man them, the man them who just have money for dash way. Them have to, them the money have to get consumed by the bigger trader them. And what then do? Create a false hope, like alright, we're gonna start move down, get people to enter and then wipe them out of the market and take their money. That's how institution play the game. You see me? So a streak of green candle, we not in a trade for continue up. We have to see one red candle first, and then we continue with the green if we need to push up further. Same thing with the red. We have to see a support before we take a trade. And we can't take a trade if we go down after we see so much red candle. We have to see what really happened first. You see me? So a support have to make. We talk about this already, and we will never take a trade like this unless we reach the support levels on a trade or the resistance level on a trade. So we have to see zones before we take a trade like this. But this is the candle that gives us indication. So the price want to move to the direction where, you know, so you want to move up from that. Now, the closure out of a zone, it can't be right below it or it can't pinch on top of it. You have to give you a good amount of, it can go, but you have to have a good sizing outside of the range for your closure valid. This is not a valid closure because this is showing that the price closed within the range and then price can just push up and then can just push back down. You need a strong closure outside to show us that the buyers are really here. The buyers really take control and the buyers really try to push the market further up before you can take a trade. This is not a strong closure because the body of the candle shows how much buyers or how much sellers in the market at the time. So if you see a long wick up or so, it means the wick means weakness upon whichever side of the pan. So you have a weak, the buyers are weak because the sellers take them out. The sellers take them out. So you can't trade after this because there's not enough strength. If there was enough strength, you'd see something like this, where the body closes strong above a resistance or below a support level. Alright. Now, now we are going to talk about choppy range and clean range. When you see, remember me tell us say there are certain times when people trade. There are certain times when people trade in our market, and that is when a lot of other people in our market are trade. When time the candle them move fast enough. Not when they're small and piecey. I'm gonna share one typical example. Just give me a second. Alright, so this is how we know when a market is giving us very bad price action. See? This is when we not really trade because we're not getting a clear direction. Like right here, so. See? This is an era of bad price action. Make we compare that to certain other areas like which part we're there now. We see candles moving up strong, yeah, so remember I say each candle represent 15 minutes and we were able to get a push from 67,838 to 68,197. Zane, make we look over here, so our push within this range is 67,162 to 67,385. That is like about $100 difference. And 15:30 45 1 hour, 15:30 45 1 hour, 15:30 45 1 hour, 15:30 45 1 hour, 1 hour. This is like 5 hours worth of candle right in the box there. 5 hours and a move on $150. You either move up and down within $150. You don't want inner that. You want inner trades where 15, 30, 45, 60, 15, 30. Hour and a half time, you move from 842 to 202, so that's $300. You would have preferred in a something with a move up and down within $300 in a shorter space of time. Or if you even want to look on the price action over, like all yes, so 15, 30, 4500, 15, 30, 4500. From this point, 256 to 618 or $400 that. And this is in the space of 2 hours. 5 hour with 150 versus 2 hour with 400. That's a big difference. So choppy ranges, when I really trade them, when I trade them part of either. Them part of the left, them part of the market where price don't really know what you want to do yet. So when I really trade them. You understand? But you'll be book up on some of them from time to time. Whenever you see them, you just stay time market. Or an era like you forward in the market, yeah, so I used to say candle not give you much push. You not give you much volume like the little part, yeah, so. You don't really want, if you don't want trade already, that's fine. But if you're not in a trade yet, never trade them part, yeah. If you enter market from down here, so and this happens to go on when you're in the trade already, that's fine. But if you're not yet and you look on the market, don't enter up here, so. Never ever enter up here, so. See? So, choppy range. If you're looking at the, if you're in the range, you see this. And go on, it just means say not much people in the market to make it move. It means that buyers and sellers weak, and then there's enough people lose their money because the market don't know which direction they want to go in. Moment the up you go down, they go up and then they go down and then they go up and they go down, you know what in that. You're not sitting there consolidation and you will lose account in that. See? You want your ranges with solid candles in it, full size candles, where you know the volume is there, and volume mean the number of contracts that is being bought at a particular time. So yeah, sometimes when people are entering market, like all people enter one time, you want the round and time when enough people are trade, not when a little bit of people. Right? So this is what this is telling you. Trade this thing, it candle them 1, 2 big rectangle, 1, 2, yeah, instead of 1, 1, some piece thing. So this is not good, this is not healthy. Same thing, or may I say to you, bro, this candle is a strong indicator for whenever you have whenever you try trade. Whenever you see this candle, you know the price ready for move. And whichever direction the body of this candle is pointing in, usually. Support. This is not a good support because this candle is indicating a further push down based on how this one look. But a support is better, as I can see, when the green candle is a full size or a strong candle where we know the buyers take control within this time frame. This is a healthy support level. So we would draw a zone here so and one up here so, but we can't draw with this. Let me see if we have it like that. And we can talk about it and have it too. So this is a strong support level because the green candle was a strong set of buyers. The red candle is a strong set of sellers, so that's a resistant level. Red candle, green candle support. So I'm good. I'm not tell of foolishness. Alright? Yeah, bro. So we will reach to buy stop and sell stop. I'm gonna explain that to you in our next video. Like the entry modes what them have, so you can know, isn't it?